uncertainty of the economy because of President Trump's tariffs. Fed Chair Jerome Powell says that is the reason the central bank has not cut interest rates. There's also remains concerns about inflation and food costs, and yet the stock market has been on a steady uphill climb for the past few months. The Nasdaq and S&P 500 both closing at record highs yesterday. To try and make sense of all this, Bryan Stretton, a financial advisor with the Reston-based Wealthspire Advisors, Wealthspire, hopefully I'm saying that right, advisors. Bryan, thank you so much for being with us this afternoon.
Of course, thanks for having me.
So Bryan, talk to us a little bit. What do you make of all that turmoil? Just of what I talked about, it's chaotic. What do you make of it?
Yeah, it's. I think the rebound happened a lot quicker than most people expected. I think some of the contributing factors to that, when you look at it, it's consumer balance sheets are still pretty strong. Consumers are still going out there and spending their money. I think the low unemployment has contributed to that as well, that people feel pretty comfortable in their jobs. But I think the expectation of cutting rates is really important as well. Although Jerome Powell and the Fed haven't done it yet, I think there's still that expectation that at some point this year we're going to see that, which is what's propelled the market to rebound really quickly from those Liberation Day lows.
And what are your concerns moving forward? Like, what is at the very top of your list?
Yeah, I think at the top of the list here, it's between inflation and unemployment. I think the question that we're having a hard time figuring out right now is what's going to break first. If these tariffs go into place and they're worse than people anticipate, then we're likely to see more inflation than not, in which case it'd be more beneficial to raise interest rates to combat that inflation. On the flip side, if unemployment gets out of hand, then we're likely to see even more cuts than what's currently projected right now. So like the Fed, I think most people are kind of in the wait and see mode and see what's going to break, what's going to kind of, fall first right now. Is it going to be inflation? Is it going to be unemployment? But right now it's really hard to tell and decide which one that's going to be.
I can't help but thinking about myself. I mean, I was looking at, my accounts, and there were days where I just didn't want to look. And that's what my financial advisor told me. And then you come back and you're like, oh, it bounced back again. So what would you tell all of us to do who are in that same kind of mindset that I am?
Yeah, well, first off, it's a great thing when the market's down, you don't want to panic, you don't want to sell. So not looking at it is actually a great strategy in of itself, but it's a really great time to evaluate your risk tolerance. And that's something that we're doing with a lot of our clients right now. It's going back and saying, well, how did you feel during those Liberation Day lows? Are those lows that you can stomach that kind of volatility? And if not, then now's not a bad time to take some risk off the table and look to reallocate potentially into some bonds, maybe some non-correlated alternative investments that are out there, just because we have rebounded. We're back to those all-time highs, as you mentioned earlier. So now is a really good time to look at the portfolio, speak with a financial advisor and say, am I taking on more risk than I really want to right now?
Yeah, and certainly it depends on where you are in your life. If you're nearing retirement, you need more cash on hand. Anything also, before I let you go, we saw some of the jobs report that 147,000 jobs added. Anything else you'd like to say about that? I'm sure you saw that report this morning as well.
Yeah, it seems that the job support's it has continued to outperform what the expectations are, which is a good thing for the markets, you would think. But we saw it. We had another good update again today. The market closed at 1 earlier today, so I think we had another record high that we hit today. So what I'm looking forward to seeing is, are we going to hit another point where good news is bad news? Where if we continue to have good data come out, is that going to be bad for the market, because then we're going to kick the can further down the road on interest rate hikes? So I think that's something we're looking forward to seeing is too much data too good of a thing that's then going to affect the Fed decision.
All right, Bryan Stretton with Wealthspire Advisors, Reston-based Wealthspire Advisors. Thank you for being with us here this afternoon on WJLA 24/7. We appreciate the advice, and thanks again.
Thanks for having me.